Good morning. I'm delighted to be here today with three fantastic panelists to talk about the Great Acceleration. I'm Tasha Ellison, the Chief Operating Officer at Finos, the Fintech Open Source Foundation, and we focus on helping the financial services industry solve common challenges through open source collaboration. So we'll kick off today with, I'll ask all of our panelists to introduce themselves. We have, why don't we go ahead and start with you, Kurt?
Thanks. Hi. Great to be here. Kurt Carews. I'm the president of Tab Bank. Tab Bank is a community bank, but an unusual community bank in the United States. We're located in Ogden, Utah. And what's unique about us is that we have been around for 22 years, so you could call us an incumbent bank. But in 22 years, we've never had a branch. So we've always delivered our products and services over the internet. And so even before we had, the capabilities we have with digital, we were serving customers in remote ways through the internet, using a lot of unique kind of delivery systems. We have a concentration of serving the transportation industry here in the United States, so that includes truck drivers, and that is what started our first genesis in how do you bank someone that's thousands of miles away. And before the mobile phone, we were doing it, so we were doing mobile banking before we had smartphones at our fingertips. And so once technology started catching up with that, that's when we leaned in to become really a digital bank that can serve small business customers across the country.
That's fantastic. Thank you. Moving on then, Daniel?
Yeah, thank you so much for having me. Daniel Eberhard, co-founder and CEO of Coho. So Coho is the leading challenger bank in Canada. Been in market for about 4 years. We've raised about $130 million so far. Excited to be here. That's where we are.
Thank you. And finally, Pam.
Pam Pelagian from Navy Federal Credit Union. I'm happy to be here, so thank you for the invite. I'm the Senior Vice President of Marketing and Communications. Navy Federal is the largest credit union in the world, and we are really about serving active duty military veterans and their families. We have 10.1 million members and about 138 billion in assets.
Thank you. Yeah, I'm really excited about the great mix of institutions we have to have this discussion today. And just before we get into the meat of things, if you have anything that you would like to ask, feel free to put it in the chat, and we can get to that later. So to kick us off, it's no secret that the pandemic has changed the way many, but not all people have had to, work. And so can you tell me a little bit what it's been like for each of your companies, how you've made that shift, and if those types of changes that you did make are ones that you think are long-term? And if you can touch on it, if you think that this has a role in keeping and promoting a diverse workforce. Kurt, you want to kick us off with your thoughts?
Sure, be happy to. So as I mentioned in the introduction, Tab Bank is a digital-only bank without any branches. And so the transition to remote work or work from home when the pandemic kicked off a year ago actually went better than I would have ever imagined. In the 6 days from the time we decided we need to move everybody remote, we were fully remote. We didn't have branches with people walking in, so we didn't have that hurdle to overcome. And 6 days later, we were running an entire bank from everybody's kitchen tables, et cetera. So that went very well. Then over the months and ensuing months and year that it's been, we encountered the same problems everyone else was encountering, which was really just fatigue and motivation and challenges. We saw our core business plummet in April and May of last year in terms of demand and volume of borrowings for our customers. And so that created a financial challenge for us. In the United States, we had the Paycheck Protection Program, the PPP program for small businesses. We leaned into that. We were able to leverage our technological expertise to actually, serve several thousand customers through that program. And then, we're doing it again right now, and that digital capability has been great. Through it all, we've actually ended up growing the bank at a pretty good clip, both in our core business and also the new PPP lending we did. And so we've grown the bank, and we actually have grown our staff in a period of time. One of the challenges we have now as we're kind of starting to think about coming back into the office is we've added staff, and we actually don't have enough seats in the building anymore to accommodate the number of people we have employed. So not a problem we were expecting to deal with a year after the pandemic started, but something we're going to have to do. And the dynamic from work from home has been an opportunity for us because we have picked up staff in other markets. Remote work, work from anywhere, I guess, is a new buzzword. And so that's allowed us to pick up some people in other markets as well as locally. And from a diversity standpoint, we think it's fantastic. We serve customers all over the United States, every state in the United States, but we're based in Utah. And when we do diversity assessments and we look at our staff, the makeup of our staff does mirror our communities, and we do a little better than our communities in terms of maybe we've got more Hispanic employees, we've got more minority employees, more women in different leadership roles. We've got moving the needle. But when you look at the Utah community and the demographics and you compare it to the rest of the country, it doesn't match, right? It's different. And it doesn't even matter in which ways it's different. It's just different. So our customers then come from all kinds of backgrounds, et cetera. And so does our staff represent our customers? Does our board represent our customers? And the answer is no, even though we're diverse, based upon our surroundings and the pool that we pull from. And so this opportunity to bring in more diverse talent from different places is actually an opportunity for us to become more reflective of our customer base. And so we see that as a potential huge win. And we've already seen some movement from being able to hire people, from anywhere.
That's great. Thank you. And encouraging that we can find and identify those positives coming out of such a crisis. Pam, I think your experience is a little bit different because you serve a different type of community and not digital only. Do you want to talk us through what the experience has been like for you all?
Happy to. It is different in that we are, as I mentioned, a credit union serving the military, and presence counts. It always has. So we're very much if you work, you're in your seat, wherever your seat, across one of our campuses or in a branch, etc. That said, we were able to get 85% of our workforce home within 2 weeks. So not quite as fast as Kurt's team, but pretty good given 2,000 employees, like I said, across 3 campuses and 343 branches. The interesting thing for my marketing team too was that I have a group in my team that's dedicated to updating branch hours, which typically change when there's been a horrific storm, a tornado, an earthquake, a fire. I mean, basically natural life events that are catastrophic would make us close a branch early. That said, with COVID and all the different branch protocols, some of our branches are on bases, which were closed and then reopened, et cetera. That literally every night we were updating the website for the next morning, the website and the app in 10 hours. So we had 343 almost separate operating plans, and then also trying to tell our members how we were available to serve them education. So early on, some of our branches had senior hours. Some of our branches were only able to serve people through the drive-through. Other branches converted to what we call curbside service. We were also limited how many people have in the lobby based on social distancing. So really, it was a big change, and trying to do that quickly in a way that still met our member needs and maintain the phone center is 24/7 all stateside. And that was really transitioning people with the right equipment to work from home in a lot of cases. That's a little bit, I won't say super smooth, but a lot smoother than just the branch support throughout the year, just because there's always been change. And my team was laughing. It's like, whoever did branch change went from like this much of a job to this much of a job. So it definitely changed. It changed us. But I'm really proud of the team and how fast we were able to pivot and get it done and still meet our member service standards.
Awesome. Thank you. Being in an open source foundation, we had a very easy shift. And I wonder, Daniel, what your experience was like, given that you're a bit more untraditional in terms of, in the banking industry, being a fintech, providing banking services. Can you talk us through what it was like for you all?
Yeah, for sure. And so it's in some ways the inverse of the challenges that you folks had, in that, the day that all that stuff started kicking off, we were planning to run a pilot work from home 3 days anyway, just in the likely event that it would come. And we ended up just like that day saying, okay, everybody stay home. Now we were 75 people at the time. And I think by January we had hired and onboarded more people remotely. More than 50% of the company had been onboarded remotely since that time. And so some of the manifestations for us for this were less about getting people to work from home naturally and more about what does this new working model look like for the new folks coming into Coho, because that was double our headcount growth. So there was a bunch of like fascinating things that came out of that. The other thing that happened was in Canada, and I'll try and make this relevant to the US market, but we had what was called SERVE, which was our equivalent of our stimulus program. And we were the first to offer that in Canada, and I think made it a little more simple and a little more elegant than some of the traditional players. And as a result of that, the business grew 70% that month. And so while that was wonderful for the business, two things happened. Like, we didn't have the flex capacity. Our teams, our product team and our eng team and our user support team, they just got crushed. And so it was definitely like a trial by fire learning moment. The second thing that happened was, and I think this was broadly true in the United States too, is there was a great deal of fraud within what was our SERVE, but the stimulus program. And we recognized, so in addition to kind of allowing people to first, we recognized that this was happening and that Canadians were getting hurt. So, 3 months later, we had, when we kind of really understood the gravity of it, we had put our own risk controls and our own framework controls in, that 3 or 4 months after that became regulation. And so it was interesting on a bunch of different dimensions across both fraud and how we operate as a team and ultimately how we scale as a company. And so, this is a little maybe crass to say, but it was good for the business. Obviously incredibly challenging for lots of folks, but it was good for the business on a bunch of dimensions.
Well, and it is essential for the financial services to remain intact, for the industry to remain intact while so many other things are being problematic. So I think the fact that people needed more services and the industry was able to provide, is a good thing. And you touched on, some of those risk controls that you put in place that then got picked up. And I think that leads us nicely into the next question. And also that, Kurt, you also touched on the growth in the companies. What types of technology challenges did you have to address in the pandemic in order to meet those specific customer requirements that you have? Whether it's digital only or in the branches. What did you have to do to address that? And are any of those things that are staying in place now that will make it easier for you to, continue to adopt and accelerate in the future? And so to start with this, Pam, you want to talk us through some of the things that Navy Federal had to do?
Yeah, in the U.S., it was really an interesting time because I think COVID put the accelerator on a lot of trends we were already seeing. We have, as serving military and young, almost 50%, like 45% of our members are less than 35 years age. So they were already digital natives. They were already big digital users. That said, the vast majority of our members still, if we look at their channel use across a year, the vast majority of them were not digital only. And while we've seen our digital-only member base grow over time, it's been kind of slow in terms of the digital-only. That said, COVID really was an accelerator. And I think there were a lot of people who suddenly weren't comfortable going to a branch and felt like, okay, can I do this digitally? And then they found that they could. It's still too soon for us to see how many of those stay in terms of being primarily digital users. Our branches are an important part of our service because we know sometimes you just need to talk to a human. And the call centers obviously are humans too. So that will, for us, that's always part of our service model in terms of making those channels really all of them meet our service standards, and then allowing members to pick where their needs are going to be best met. But we're still monitoring it to see how many of those tried things digitally for the first time and are going to stick with that experience. COVID also was unique in that we also had the PPP mentioned as well as the CARES Act. So there was a lot of implications that were coming down and coming down quickly in terms of helping people. We've just in the U.S. processed our third round of stimulus checks for everybody, and I'm happy to see the support and help has been there, but it has definitely been like it's been a year of sprinting and not a lot of marathon running where you could just pace yourself. It's been a year of sprinting.
Yeah, I definitely agree, and it gets a little hard. But that I think, Kurt, in our previous conversations, I think you had some experience as well around really being able to respond quickly to some of those regulations, and maybe you want to touch on how it was slightly different because there's slightly different variants, and how that was for TAB.
Sure. Yeah, there's a couple things, and as Pam was mentioning, the great acceleration, that is huge, and I think that's part of the big overall picture here is the opportunity, behavioral science and et cetera. When you look at it, the customer behavior a lot of times isn't quite ready for innovation, right? And we've seen that where innovation has failed because it was too early and customer adoption has been so slow. And as Pam said, it goes like this, right? Barely up. And then this is just accelerated, right? And all of a sudden everybody's forced to at least try digital only. And so there's this lurch forward in acceptance that's rare to see, and so what do you do and where's the technology fit in and all that? And for us, the PPP program was the biggest example of how the technology worked and what didn't work. And in the first round, we're a very adept API bank, right? Meaning that we have 1,300 APIs we built in-house. We can spin up an API. It's in our DNA. And so, round one comes along. We built an API to plug into the SBA system, which is a pretty archaic system. The morning they were going to go live, the SBA puts out an announcement that says no APIs allowed. We had already tested it with them and everything. And so, it just went away, that capability. So we had to adapt and figure out how to create manual processes, how to get people. And so we leaned into it. But during that whole process, we were able to also apply RPA to certain of our processes and build workarounds and, all kinds of crazy things. Then between the first round and the second round, the SBA hired a third party and they created the API connectivity. But to what Daniel said, fraud is rampant in the first round, and it was still a big threat for the second round. So, we took all those learnings, and then we get a second trial run at it. So we enhanced the technology that used AI to do fraud checks with a vendor in between that time, so that we had additional screening, so we could automate the know your customer process as much as possible. And so that, we engaged in some new enhanced technology for that in between. And then the RPA, so we created bots to go in and automatically create loan documents and automatically onboard them into our core systems in the back. Those things are going to outlive PPP, right? So we've already started, pointing the bots to the other business lines we have to automate that section of the workflow. So there's a good bit of it that, what we found, the learnings are, sometimes your partners aren't going to be as ready as you are. And so, but that doesn't mean don't invest in the technology. The second one is that, these incremental gains, if we're growing, if we have adoption at an incremental pace, is fine. But if you have a lurch forward, those incremental gains we were making over the last few years turned out to be not enough. We had talked about applying bots to our documentation process for probably a couple of years, but until this happened, we didn't see quite the ROI to move it to the top of our project prioritization list. So, but because we are digitally native, and we do have some muscle memory at that kind of tech, we were able to adapt. Pretty quickly.
Yeah. Well, and I think that is, one of the themes that we see is if you can find where you had to do that acceleration, and it's making those, long Zoom meetings and long hours worth it for a whole lot of future proofing. And, particularly looking at, as has been mentioned a couple of times, improving on fraud and the risk controls and the AML, that's all stuff that's going to have a huge benefit going forward. And Daniel, maybe you want to touch on, I think you also have, there were similar rollouts in Canada, as you mentioned, and how you were able to get your user base, which, as you mentioned, grew incredibly, that extra money.
Yeah, so I'll add one comment, because I think it was, one of the things that we thought about this in the short term was this was great for the business and, all of these dimensions, but, a reasonable hypothesis of what we're trying to do and what it takes to be successful is that, it relies, and Canada is very different. I think there's 10,000 banks in the United States. There's 6 banks in Canada that have 95% of the assets and 95% of the AUM. So it's heavily, heavily centralized. And part of Coho's hypothesis is those banks are legacy, and they're going to have a really hard time adjusting to change but now there's this massive external event which has created a bunch of urgency within the organization. So, we may end up in a more competitive market long term with these financial institutions because this has catalyzed so many changes within those organizations. So it great short term makes us nervous long term. So yeah, what we did was we were able to. So it was interesting in Canada. We were able to directly connect to the CRA through one of our partner sponsor institutions, and made this simple. And again, we're kind of first to market, and I think users responded to that. What also came out of this from a learning was, we got there first. I think objectively we served people better, and we also put the fraud risks or the fraud functions in first as well. But there was no mechanism for the government to engage with fintechs through this whole process. And so it ended up being and we have not only in Canada do we have the bank that we work with, but then they have essentially a Schedule 1 bank, which then goes to the central bank. And so when these payments were getting distributed, it was actually a daisy chain of 4 institutions before we would get it to the user, which worked from a timing perspective, but, was fintechs were largely very much kept in the dark in this process in Canada. And we were actually some of the ones who started raising the flags and saying, hey, Canadians are getting hurt by the incredible amount of fraudulent accounts out there, which are then applying for CERB, which is then going to show up on somebody's CRA tax return. So, I think it catalyzed a bunch of hopefully useful long-term conversations on the regulatory side as well.
Oh, I hope so. I really hope so. I think there's, in looking at the last year, and I see hope in places. That I think there are some regulators that are, are very forward thinking, but they're big organizations like many other organizations, and so they don't all move fast at the same time. But I do hope that this is a great opportunity for the regulators and the regulated entities and fintechs to have more open dialogues. So, thank you for raising that. Did anyone else want to comment on the opportunities for improving dialogue and interaction, and whether that's electronic or verbally with the regulators?
Sure. I think that that is an interesting thing, and it's something that we saw during this pandemic in the United States was a different approach from the regulators, and not just regulators, but also the legislative bodies. One of the unique things that was offered was kind of a free pass to lending institutions, to banks, to work with customers. So to defer payments, to restructure the credit repayment terms and things of that nature, for consumers and businesses as well. And so the very strict regulations that, I've been doing banking for decades, if you cross that line in any way, even barely, the regulators make you take that loan, if on a TDR, troubled debt restructuring, and put it in a bad pile and keep it on your books and records as a problem asset. First time in my career, the regulator said, okay, this is an unusual circumstance. We're going to allow you to work with your customers in a way that we've never allowed before. Defer payments till 3 months out, and they kept extending the ability to do this. And we're not going to require the banks to count it against your problem asset book. And so we did that in a very broad way for our existing customer base. And deferred payments, as well as restructured a bunch of credits. But the deferrals were really interesting to watch. We have a very large pool of term loans, for instance, that are equipment loans. And we were very aggressive about completely deferring payments. You didn't have to pay interest, no payments for up to 3 months. And sometimes we'd re-up it and defer a little bit more. And we're now in the tail end of it. We have very little left on deferral. And I don't forget the exact stats, but somewhere above 98% of our customers went back into full repayment and haven't missed a beat. And so the program really, at one point in that pool that I mentioned, we had 60% of our customers on some form of deferral, at least one payment. And we went to 98% in full repayment and current right now, which means it really worked. But it was, for me, really encouraging and unusual to see the regulatory bodies support this kind of unusual tactic, based on history. We also see them leaning in and encouraging working with fintechs throughout this process, and that's been built. That's another thing that's taken a big shift. We can see the regulators, FDIC is our primary regulator, starting to put people in charge of innovation within the regulatory bodies and things of that nature. The pandemic caused a massive, I think, shift in their view in adaptation to that. And you see them even, encouraging fintechs and even allowing some of them to borrow at the Federal Reserve directly and things like that to help PPP and some of the other programs. So it's encouraging. I'm hoping that this sticks and that the regulators continue this deep partnership to figure out what's best for the customer on both sides.
Yeah, absolutely. So shifting a little bit to more of the, we've already touched on a fair amount, actually, the way the pandemic has accelerated use of some technologies, things, moving up to the top of the list that might not have been there before. But even, so I think we've definitely seen acceleration in the last year, but even in the last 10 years, there's just, kind of new technologies, new applications of technologies being delivered at a pretty rapid pace. And so I wonder if you can talk to us a little bit about how what are the most important technologies that you're using? What are the most important technology trends for your own organizations, and how do you keep pace with the rapid change? And maybe, Daniel, you can kick us off, given that you are a newer entrant, as you mentioned, and as can have benefits and challenges. But on the technology side, you could take advantage of some of those newer technologies.
Yeah. So is the question what technology we use, or how do we employ technology to be more innovative?
Yeah, it's both, and it's how how you make sure that you are finding the new technologies and incorporating them into your systems.
Yeah. So I think technology is in service of ultimately, what we're kind of in the business of is getting people their money faster and earlier, giving them access to products they otherwise wouldn't have had for the wrong reasons. and or increasing the yield on the money that they have with us. And so across all three of those dimensions, we have different ways that we think about product. But so I'll give you like one sort of concrete example. And a decent amount of Coho users are subprime and near prime. And in Canada, and I think that this is also true in the United States, but if you have less than a 600 FICO or less than a 600 credit score, you basically can't get a credit card in Canada. And that's a material percentage of people. And the repayment rate on a sub 600 credit card is like 90%, which means that you actually have a product construct with a false positive rate of 90%. And so what we're doing is leveraging, and to paint another example, if you have perfect information about that customer, you could lend them at 1% and still make money. Not 1%, but you understand. And so what we're doing is looking at alternative means that leverage our existing data set to say, either can we subsidize this revenue such that we can make it elsewhere on the customer that we're okay to offer this at this rate, or are there unique insights that we have as an organization to say, like, you should be able to get this product? And so our early payroll product, which allows people to access part of their funds early, we don't look at credit score. There's no repayment. We're not going to chase you down with collectors. And yet that's a profitable product for us because we have sufficient information that doesn't even go to the bureaus. It's just a pure in-house decisioning mechanism that we've kind of built. And so those are kind of the things that we think about in leverage technology. But ultimately, lending is risk, and risk is technology, and technology is information. And that's kind of how we think about it. And so the better we can kind of triangulate around that information, the better we'll be at getting folks access to products that they should probably have.
Yeah, I think that raises some really important points about there is a lot of data around, and how you can access and harness that data to maybe use it in ways that it hasn't traditionally, to use it in better ways than we have in the past. We don't need to stick to the sort of all the traditional data formats that we have, and accessing it and harnessing it is hard, and especially if you're you've been around for a long time and have lots of different data systems, it can be hard to map all of that information together. But certainly I think that there are more technologies now that make that feasible. And, I think the industry hopefully is looking to do that. Kurt, one of the things that you mentioned that struck with me when we were chatting ahead of time was building for agility, it is changing all the time. And I wonder if you wanted to touch a little bit on, what that means and what that's meant for you guys, particularly being digital only too, making sure that you don't have that face-to-face experience. So you do need to make sure that there's a strong digital one.
Yeah. Well, Daniel touched upon an interesting part of what all of this really is founded upon, and you did too, Lisa, Tasha, the data right underneath it. And so our investments really center around the data because that's where it all, where the magic happens. And right, so the ability to consume data, not just from internally, but also externally, and come up with a solution that's bespoke to your customer is at our fingertips. It's available to us, but it's not easy, right? Data management is really, really hard. And part of the reason it's hard is because you've got this combination of legacy old world operating systems and then the new, right, cloud-based operating systems. And as much as you can debate the benefits of either, reality is we live in a society that's dependent on both today, right? And so you can't do one and assume you don't ever have to do the other, because you may need data to complement the data that you have on a cloud-based operation. You may need data that's stored in another, either a vendor or a partner or somewhere else that's in a legacy system locked in a server somewhere. And then when the data comes out, is it usable? Is it clean? Is it, all those other things? And so one source of truth that you can move at speed is our holy grail. But that's a journey, right? Because there's no realistic destination to get there and serve our customers well. And so, for us, the technology that we lean into is really, and we're a small organization, with limited investment capabilities into technology. And so, what we've leaned into is the partnership model and being able to leverage outside sources. And so we built a state-of-the-art data platform internally to get a single source of truth from our different disparate systems. And we built an API stack, both from our core systems and to that middleware and then out, to serve our mobile banking app, to serve our customer service platform. And then we built a bunch of API stacks that are set up for an open banking, kind of model. And so the combination of all those, the end goal is to become a very agile, adapt partner so that we can plug and play with part D partnerships. We've moved a bunch of our partners off of our vendor list into our partner list, meaning that these are the people that we need to collaborate with, not just pay them a fee for a service, right? And together, that's the model we built to get us to the golden finish line.
Yeah, absolutely. And obviously, coming from an open source organization, that partnership, that collaboration, that being in it together to build something better, certainly resonates. And doesn't mean that everybody shouldn't have their own, special sauce and important things, but there are some things where that collaboration and partnership just really makes the whole system stronger. Pam, is there anything you wanted to touch on in terms of, how you're able to use technology to, meet the specific needs of your unique user base as well?
I loved as you were opening up, you talked about the big challenge, I think, for all of us is how do you keep up with technology? And part of it for us is, yes, it's keeping up with technology, but it's really keeping up for us with member needs. And as I mentioned, our member base is 10 million strong. So as you can imagine, the needs for an 18-year-old newly enlisted sailor, soldier, Marine are very different than a retired veteran or somebody who served 8 years and now has a whole different career and their families are doing something else. So, the technology around those needs for us is kind of broken into a couple of different pillars. And the first is Know Me. So how do we show our members that we know them and know what they need? Show Me, like how easy is it and what do I need to do? And in some cases, do it for me. One of the things we learned from the stimulus checks is because people were hearing on the news media that the stimulus had been passed and you could get your payment as soon as next week. Everybody translated that to mean like tomorrow. So after that happened the first time, the second time we went through and people that got stimulus checks, we went ahead and set their accounts up for an alert so that they would get a notice when the check was coming versus them calling all the time saying, do you know the status? When am I getting my check, et cetera? And truthfully, none of the financial institutions had visibility in terms of who was getting paid when. So our members were looking to us for a need, but we really felt like what they were really trying to figure out is how will I know my money's there? So proactively setting up the alerts, obviously they could go in and take them off, but really helped people know immediately that, yep, it's there and had the assurance that it was there. And I know an alert is a low technology, but it was something that was high on the member needs. And it also helped them not have to figure out that they needed to either call us or wake up every day and check to see, did I get it? Did I get it? Did I get it? And particularly for families that were impacted with COVID and lost jobs, those stimulus dollars were important, and finding out the status of when they were getting them was important. So for us, the technology comes back to that know me, show me, and in some cases do it for me.
Yeah, thank you. So we have about 5 minutes left, and I prepared lots more questions for us, but maybe we can touch a little bit on which Daniel, you've already mentioned, being an incumbent versus being a new entrant, and where there are some benefits and challenges. But, I think you made a very salient point that everybody has had to accelerate, and so, where is the advantage? So, you've had to jump the gun and maybe that and get some more things done. But as a new entrant, you clearly have seen a rise in business. And I wonder if you wanted to talk a little bit more about, what you think the opportunities are for, new neobanks or new models of banking in financial services.
Yeah. So I think a couple things. I think that the folks who are, so if you kind of play the fintech tape backwards, kind of 3 or 4 years ago, we had a bunch of what are now large challenger banks, Chimes and these kind of ones established and stood up. My broad perspective on this is now we're seeing like very specific applications of fintech because it's pretty hard to dramatically improve on Chime. Like it feels very Me Too-ish within the constraints of that market. And so I think my broad market observations are for neobanks and challenger banks, there's this core baseline functionality that you have to meet, and then you need to have at least one infrastructure spike that either lets people get paid earlier, that either lets you make better decisions around risk and access, or that either dramatically improves the yield that folks have with their accounts. And if you look at that, all fintechs can fit on that plot somewhere and are now getting into like their second and third infrastructure spikes. If I was going to like speculate going forward, I mean, I think that we're seeing like really granular crediting decisions with buy now, pay later and those kinds of things that are interesting. And I think the longer term, I do think that we haven't seen a lot of fintech pick up with B2B companies in the way that we've seen B2C companies, like the massive fintechs are Square and Stripe, or Stripe's a bad example, but Square and Klarna and some of these ones are very consumer focused. I think as some of these fintechs start to put pressure on the banks, these B2B companies are going to have a lot more value to offer banks in some of these equations. And we really tend to look at it, though, not as zero sum. I think that this is like collectively an ecosystem, and there's lots of versions of this where banks are successful and so are fintechs, and lots of versions where Coho wins and the banks don't lose. So, I think that's broadly our market perspective. Hopefully that kind of answers your question.
Yeah, no, and I think that's absolutely right. There are a lot of people who need banking services, and the types of banking services that they need across the board are going to be different at different times in their lives. And so, I think having a mix of institutions able to provide those services is really valuable. And also having, people challenging or new entrants challenging in specific areas drives that innovation. I think you need that healthy, you need some tension, you need some conflict, because that helps drive some new products, some new ways of looking at how you score credit or don't score credit, and if it's always the same groups, same banks doing the same stuff, you don't get any of that. So I think that's really spot on. So were there anyone else want to comment on the opportunities of existing banks or challengers before we start to wrap up?
If I could, because Daniel said something that just really rings my bell, which is that this zero sum game mentality towards business relationships, the customer. We've got to get away from that kind of thinking. And I think the legacy banking industry, which I've been a part of for a long time, has got to stop thinking about how valuable is the customer to me and start thinking about how valuable I am to the customer. And that's a mindset change that's necessary, because the challenger banks are designing around the customer need as the kernel that they build from. And banks are looking at, how can I capture more share of the wallet, or how can I make this particular customer more profitable to me? Well, the easiest way is to build value by serving the customer better, having more customized, create empathy through quality services that make the customer really understand that, hey, Tab Bank's got my back, or this bank understands my particular problem and has a solution that's ready for me, right? And that's putting the customer first. So, when Daniel hit upon that, I couldn't stay quiet. So I think it's a great comment.
No, that is, and it's absolutely worth hitting home. So one last quick question for you. It's one of those ones that I find always really hard, so I'm glad I'm asking and not answering. But if looking ahead, where do you think the next acceleration in digital will be? For that digital roadmap, will everything be in the cloud? Are we going to still have paper checks? I still have to write paper checks sometimes, and I would really be ready to do away with that. But I know that it's important for some people. Is it going to go into? Are we going to still have actual physical currency in our wallets? So, just running through the list, what are your kind of, where do you think the digital roadmap is going next? And we will kick off in the same order that we started. So Kurt, you're up.
Okay. Well, I think, the term that I'm hearing a lot that's kind of a hot buzzword, right, is embedded finance or embedded financial services. And but that embedded word, I think, kind of encapsulates, and bankers don't like to hear this, but I think the best solution for the customer is actually for banking to fade into the background, right? So as much as we have the big, beautiful buildings in the downtown areas of all the big cities, and we love our presence and our branding, the truth is, for that technology is going to drive us to the point where the consumer, the small businesses want to, I'm going to walk in with my phone and I'm going to conduct a transaction, and the banking part of it that is necessary happens behind the scenes automatically, and that's going to be from collaboration and deep partnership between not just banks, but the retail world and everybody else that the customer's interacting with. I think that's where it's all heading, and we got to learn how do we fit into this new dynamic, because if a customer is going to walk into one day to the appliance store down the road and just point the camera on their phone to a washer and dryer, and then walk out and walk home and it gets delivered the next day, right? A whole bunch of financial transactions happened in between, but they didn't tap on Tab Bank's app to make it happen, right? It happened in the background. And that kind of seamless, money management, help me save, help me retire, is all going to turn into an automated thing that happens in the background, as it should. Right?
Excellent, thank you. Daniel, your thoughts?
Yeah, so we tend to think about this from the lens of, transaction fees are probably going to go to zero. Time for transactions is probably going to go to zero or near zero, and multiple accounts, the days of 6, 7, 8, 9 accounts will probably go to zero. Like a first principles perspective would say that for the vast majority of people, they want one account with whatever is the risk adjusted rate that they're comfortable with, and they want to spend directly from that account. And so if that's a high interest savings account, that's great. That's what Coho does today. You spend directly from a high interest savings account. It might be an investment account. It might be your crypto account. That's like the very progressive bleeding edge of this kind of stuff. I don't think that we're going to see dramatic shifts because I think we'll see fragmentation within the usage, but to your point, like you still use checks, and this technology has been around for a while, and lots of folks still use checks, and those customers still need places to go to do banking on the term. There is no version where the 70 plus folks are like trading in Bitcoin. There's just like that, like we just will continue to have real use cases for real people that will need to be served by real institutions. And so, I think we'll see more fragmentation in terms of deep spikes on specific use cases. But, but as much as we don't have checks at Coho, but we certainly understand that that's going to prevent us from attracting some subset of the market,
Yeah, absolutely. And to round us out, Pam?
I agree. I would have used, instead of fragment, use segmentation, simply because, and it's what Daniel kind of spoke to, but there are some members, and when I think about our membership base, there are certain functions. I mean, even think about what we went through this year. It probably was a great time to have a financial advisor that you really could talk to, a real live person. And you may not have valued that before, but guess what? The last time we had it was during the Spanish flu, and you probably weren't around to learn the lessons you needed to for your investment portfolio, nor would they be relevant to what's happening now. So, our point of view is going to be that balanced service, because there is time you need to talk to a real live person. And let's face it too, I think COVID also created that people want to belong, they want to connect to something. I personally think that that's part of a credit union and a common bond that we all share in terms of being a community together. And then the other times I don't need to talk to someone. I needed to buy something from the vending machine. I didn't have any change and I did it with my phone. Done. Mission accomplished. And I don't even think of it as digital currency. I just think of it as buying what I needed. So I think there's a lot more segmentation, and the banks and fintech flexing to meet those individual needs, and noticing that if you make certain channel selections, like you were talking about, from not having branches, there are going to be certain segments of the market that you just aren't going to be able to service the same way. And really focusing on what really matters to your customers, and in our case, our members, is really the difference maker. People want an experience. They don't want technology. They want the experience that the technology enables. And the more we can all remember that, the better off we'll do.
Thank you. And I think that actually nicely sums up a number of the threads that came out in this last question. So that's the end of our session. I have to say I've really enjoyed it. Thank you all for your incredible input. And I thank you.